Hello and welcome back. My name is Josh, and today I wanted to follow up on my video about Miso Robotics. I'm going to post it over here. So if you haven't seen this one yet, or that one yet, I'd suggest go watching it now. But I've had a lot of questions about that, and I figured it's a good time to discuss kind of how I see different investments. So again, when you're investing in there's different stages of investing really. The early stage investing you could call angel investing. Angel investing is where if someone has an idea for a business and they're just starting out. Very high risk, but could be very high reward. Imagine being, the first check into Uber or Facebook, could have 10,000x. But there's also hundreds of startups that fail every day. It's like they say starting a restaurant, like, there's some that turn out amazingly successful, McDonald's, Starbucks, but the vast majority go bankrupt and close down within a couple of years. So there's a lot of risk early stage, but there's also a lot of upside. As you get farther and farther along, later stage, your risks become lower. A company like Apple, Apple's not going bankrupt. It might not be a great investment over the next 5 years, could be a great one, but your risk is much smaller, but your upside is also much smaller. So with companies like Miso, this is an earlier stage. It's pre, it's not public yet. It's private, so that means it's going to have more risk. And so really, when I look at investments, I break them into three different categories. Looks interesting. Looks interesting means I want to investigate more. I want to look into the business. What do they do? Why do I think their growth is going to either accelerate, decelerate? But it's typically a screener to say, let me do some more research into this. That's one. Looks interesting. Doesn't look interesting. Maybe it looks expensive, or it's not growing, or just I don't want to look at it anymore. It doesn't warrant enough for me to do more research. And the third one is too complex. A lot of companies actually fall into the too complex. This doesn't mean they're a bad investment, doesn't mean they're a good investment either. It just means that it's too much, too difficult for me personally to do much research into. So I had a commenter ask about a biotech company for me to look into. And the thing with biotech companies are typically they're working on they're doing research and trying to find a cure to some disease, let's say. And if it works, they could 10x, 20x overnight. You'll see this. But a lot of these times their research papers fail and ends up going down 70, 80%. It's just a ton of research. And personally, I have no insight into biotech. I don't have a background in chemistry, physics, nothing, I am not a scientist. So I have no particular insight. And it's not like you can value the company off of revenues, because typically these early stage biotech companies don't have revenues. All they have is a theory on, hey, this chemical compound could cure this, and we're trying to test it on a double-blind sample. So that's really all you're basing on is do you like their paper? Now, if you're a scientist and you understand how the chemical could work, you might have an edge, and you might be able to put your money there and make a lot of money. Or if you're just betting, you could try and make a lot of money there. But personally, I have no edge. So for me, biotech too complex. So that's why I do not really invest in biotech. If you did want to invest in biotech, I would recommend looking at ARC's Genomics Fund because they do have an expert. Again, I do believe biotech presents great opportunity. I just know I'm not the person to analyze those opportunities. So find someone who is good at that and let them manage those risks and do the research. Another one, like some financial instruments are too complex to understand. Oh, this is you get a warrant and you get two shares and da da da. Some of these can be very complex and hard to understand what you're actually owning. And so that can also lead to a risk. And then there's also the risk of, and this is where Miso fell in for me, is too complex because of the structure of the thing. You're not buying a share, you're buying, because it's early stage still, there is going to be massive dilution. It's not like Apple. Apple's actually buying back shares, so they're actually reducing the number of shares. But even companies like Tesla, the number of shares are going up, but pretty slowly, and you can kind of track that. And there's easy data you can find online to track the share count. With private companies, there's a lot less transparency, a lot less data, so it's a lot harder to track. And they're raising money, so if things go really well, they could just say, "Hey, screw it." Or if things go poorly, either way, they could try and raise a bunch of money, and they could dilute the hell out of you. They could be raising they could be doubling, tripling the number of shares in a very short period of time, which is a major risk. Again, dilution is a silent killer. Even if the company is worth 3 times more, if they sold 4 times more shares, created 4 times more shares, and sold them to raise money, your investment is actually down. So for me, I'm a big believer in Miso, the technology. I think that we are going to see more automation in what I call, everyday service jobs, whether that's I think restaurants is one of the major places where we're going to see a lot more automation. However, one, do I believe in Miso? Again, they're still beta testing it. They're working with a couple clients. I think White Castle, that's good signs, but they don't have real revenues, so I can't project on revenues. I'm not testing the product myself, so I can't say, is this better or worse than there's other companies doing this? Why should they win over another company? I haven't tested the product, so I can't tell. I can't base it on revenues. They don't have publicly available revenues much, and it's very complex to understand what you're actually holding. Yes, you own a share, but how much is that diluted? What's your pricing versus existing shareholders? There's a lot going on, and so for me, this falls in the too complex. So um, but that being said, I am very interested in Miso Robotics. And so if you do own Miso Robotics or you have bought, let me know in the comment section below. How's your experience? What are your thoughts about the company and the investment? Would love to hear. And is there anything else that you're looking at? Because again, for me, this is an investment journey, and I hope this is for you too. I'm always trying to learn, and right now this is too complex for me. But one day maybe I'll say, you know what, and that's why I don't mind investing later on. Maybe 2 more years from now, the company's a little bigger, they're ready to go public, and there's a little more disclosure, and I can more easily understand the business, the revenues, and stuff like that. And then I'll take a swing, and I won't get 1,000x upside. Maybe I'll only get 10x upside, but I'm okay investing in something I understand better. You have to understand, you don't have to invest in everything. There's thousands of companies out there, and so you really want to make sure that you're putting your chips in with the ones you understand the best and the ones you think have the most upside and the most certainty. You kind of want to weight conviction versus upside. So how convinced are you that this is going to be a great investment versus how much upside do I think this has? And if the upside is big enough, you might be able to justify low conviction. I actually mentioned that in a video I did just about Bitcoin, which you can actually view here, where when I invested in Bitcoin, I had actually pretty low conviction it was going to work out 10%. But I said if it does work out, it could be 1,000x upside, 10,000x upside. So I still thought it was worth putting a little money in, given the upside, even if you have a low conviction. But yeah, that's my thoughts on Miso and how I see kind of the progression of investments. Earlier, the investment you know, you either have to have a huge upside or huge conviction. And with Miso, it's just a little too complex for me to really have high conviction, though I definitely see the upside. So thanks so much for watching and talk to you next time. Cheers.